Hello,
Hey, Steve. Are you Steve?
that's me.
Okay, just making sure I'm in the right spot. I'm
Yeah,
Jamie, by the way.
I'm Steve. That's Jamie. We are all square. Monday's
Awesome. Well,
regular crew.
it is, and welcome everyone to another Monday office hours with myself and Steve. Before we get into the good stuff, though, I want to take care of the legalese real quick here. Just want to make sure everybody knows we are publishers of information. We distribute the information that people like when it comes to the markets. So that's what we do here is we educate. So that's why we're sharing this knowledge with you guys here today is for educational purposes only. So please don't take what we have here, which is very cool, by the way, as a solicitation to buy or sell securities or anything else for that matter. If you need a registered investment advisor or broker dealer, go to the great Google machine and type it in, and you will be assaulted with multitudes of people. All right. Well, Steve,
Yeah.
before we get cruising here, I want to make sure everybody is aware of the changes that we've recently made to the webinar schedule. We were doubling up on the Wednesdays, but due to a momentary lapse of reason, we have decided to spread it out a little bit more. So things are going to stay the same for us on Mondays, and then you've moved yours to Tuesday, which is going to be tomorrow, same time. Then we progress through the week on Wednesday with Dan and Brad hosting the Q&A demo, about 30 minutes after the close there. And then we wrap it all up with Andy's studio on Thursdays, and I write shotgun with Andy. So nice and easy. One webinar a day now, Monday through Thursday. Friday, everybody gets the day off. And also, too, if you guys have not been going to our free trading room, which Barry Anderson moderates. If you haven't been going there, you need to start going. Great place to learn about the software. Lots of good traders in there. Very active environment. Barry does a great job.
A lot of sharing.
Lots of sharing of knowledge. All right, Steve, how about I pass it over to you and, hey, we are no longer in the clump, sir.
Sure, I can receive that just as soon as I close my Pinterest of unicorns. Hang on a second. Clean up my screen here. All right. Okay, people. The spiders. They have broken out. The range that Jamie spoke of earlier was this range, the clump range. The election range has been resolved, so I need to take my crosshairs off and highlight that, and that's kind of out of the picture now.
And I
Because
misspoke, Steve. We were out of the clump range a while
a while
ago.
back, yeah.
Even
Well,
more spectacular today is,
the fact that we have a new all-time high.
yes, sir.
All-time high. The Dow made an all-time high last week in its leadership role. S&Ps went ahead and followed today. The IWM, which is the Russell 2000, also made all-time highs. Look at this, and I don't have a name for it other than the train has left the station, and I don't know what to do. These types of candles that just, they never really break the prior day's lows. They just continue to move higher. The train is just kind of leaving. There is no pullback. And I see this sometimes. I'm not surprised, I should say, with the election and the major revamping we had of active managers, shifting assets out of technology and into the Dow components and industrial components and things like that. So we have had a massive catalyst in change, obviously, with the election of the administration. But boy, you start to see these candles that just they won't even touch yesterday's lows. And for lack of a better term, I just call that the train has left the station. Do what you want with it. It's a very powerful trend, and it blew right through the resistance today. And seeing that in a lot of things. We saw that in the Dow. Actually, we saw an explosion in the Dow, and the Dow's been going sideways. So, very, very much, let's see, let me put my crosshairs back on. very much interested to see if the Dow gets back above this level. As we can all see, a nice move up there and then consolidation under a defined level that is now being created here. Keep an eye on that. But the IWM, the last few days, just no pullback. It's basically a market that's just not going to let you in. It's not going to pull back and let you in. And they're very hard to trade because you don't want to be the last guy in musical chairs, then have the big elevator down day come. But it's a graphical representation of a big change in allocation, in the way things have been structured. So I'm kind of not surprised to see this action. I don't know how long it's going to last, but this kind of action is just driving us right through the upper levels that we've been looking through. Again, this was the all-time high in the Dow. The Dow was our leadership, along with small caps, the Russell 2000. But now we've got the spiders finally catching up, and the lowly old Qs. They still haven't been able to come back and make a new all-time high. So, a little bit of background just to keep in the back of your mind. Technology is really not the favor right now. What's in favor is the small caps and the industrial agriculture. As a matter of fact, this week, if you guys follow me on Twitter, I mentioned that this was probably the week to start following these agricultural plays. And Mosaic was mentioned in Twitter. CF was mentioned in Twitter. And then POT, P-O-T, was actually the trade of the week. And since I brought that up, look what was kind of happening in POT, trade of the week. It's kind of getting that train leaving the station look, right? Each day never really tested the prior day's lows. And so when I see these types of, I call them like Super Bowl flags, they're usually, they have a pretty good follow through. And in this particular case, yes, POT was just announced this morning. Xavier, it was the trade of the week. Over the weekend, we looked at a lot of trend change reversals. This was one of them. And, not to mention the fact that it was on my trend change reversal. It didn't have a big short float, but it was showing signs of this train leaving the station. And then, nice trade today, good follow through, hopefully some more tomorrow. But it just feels like, this particular sector, the ag sector, was kind of ready for its move after watching steel and cement and copper and everything else. It kind of made sense. And then, we never play on a guess, but when you pull up the charts and you see, oh yeah, big, long trading range, this thing has a shot to break out of. Trains leaving the station kind of activity here as we're approaching a new level. So it's kind of a no-brainer for us to curate that one for the trade of the week this week on POT. So this market is not showing any signs of wanting to move lower. My particular price alerts, what's working, and I'll talk more about this in my webinar tomorrow, the short squeezes. They're running for the hills. Trend change lubricant, short squeeze, short squeeze, short squeeze, short squeeze. That's the kind of stuff that's creating alpha right now, and it's not surprising based on what this market is doing. We had a major shift in sentiment, and we've got these trains leaving the station types of, consecutive candles on the daily charts. So shorts certainly not working. There may be a time when they start working again, but this market feels like, it's just waiting for the Qs to really create the fourth powerful ETF to make a new all-time high. And hey, you just can't argue with that. So that's my sermon on where we are in the market. If you want to add anything.
Nope, all good stuff, Steve. We'll flip it back around here.
All right.
And we'll go on and talk about what Miss Holly put out for everyone today. So hopefully everybody has eyes back on my screen, right, Steve?
Yes, we see the agenda today's class.
Perfect. So, it's going to be, it's interesting to see how Holly's risk-off PML ebb and flow today, and we'll get into that. And we'll talk about, some of the highlights that she brought before us, and then what we can do with those stocks moving forward. Are these stocks viable candidates? Holly delivered to me a, statistically weighted entry that has worked, but what about swing trading it? And of course, got some very simple techniques to help you guys try to figure that out moving forward. And then we're going to dig a little bit into, since the SPY did close today at all-time highs, obviously all stocks do not move to the whims of the magnet that is the SPY, but a lot do, even though they're not in the exchange, or in the index, excuse me. So what we're going to do is we're going to take a look we're going to pull the rug up, and we're going to look at a certain part of the S&P and why it might be important to keep an eye on that segment moving forward. And then, of course, as always, we'll get into price alerts towards the end of the webinar and talk about last week's as well. All right, so I'm going to put this slide on ice for a second and move it over here. And let's just go ahead and talk about what we see right here. Of course, this is the strategy panel that Holly showed up with this morning, the starting team, so to speak. So today we had 13 strategies make the cut. 5 of those were shorts, 8 were longs, as you can see over here, the type. For the trade count, we came in right at 24 trades. And what I really liked about today is the nice flow of trades out of the strategies. 4, 4, 3 from these guys, 2, and 1. We didn't have one of those days where one strategy goes a little insane. And even though it killed it, sometimes it's a little hard to keep up with plays if they're coming out every so many seconds. So nice distribution of trades from Holly today. And if I pull my cheat sheet back over here and we look at this little topic right here, Holly recap, statistically noisy at the top of this range, which is no big surprise. But the P&L chart on the risk off today is pretty interesting. Now, I'm talking about this little guy right here, okay? So, typically, and of course this isn't all of the time, but if you watch it every day, like myself and Steve, and interact, and, we're watching Holly day in, day out, not a day goes by that we don't. Now, what we see here with the risk-off P&L, not characteristic. Typically what will happen is if it's a risk-off, profitable day, we'll typically get a little red drawdown, maybe a couple of attempts to go green and red, and then we see a push to the green for typically the remainder of the day, if that's the way the day turned out. But seeing what happened today on risk-off mode, starts off slightly up, then we go negative, then we're up, negative, up, negative, up again, negative, and then finally up again, and then towards the end of the day, negative again. I mean, a lot of back and forth here, way more so than normal. Now, of course, risk on tells a different story. So, I was having a session earlier today explaining Holly what it is, how we interact with it. And, one thing I'd like to point out here is, everybody's talking about, well, how should I interact with Holly? Should I just follow her every play if I really want to get the most out of the statistical probability? That's one way we can do it. And I just wanted to point out to everybody that if you were, say, executing 100 shares of every Holly trade today and just holding it, at the worst, you would have been down not quite $130 is what we're seeing here. 1.37 points on 100 shares. 137 bucks. So, and what we'll notice if we go back and look at risk on, if you want to get a good idea of risk moving forward, if you're engaging in that type of model, is just start looking here and going, okay, well, I know there's a lot of trades coming out, but even at the worst, if we were in all of these trades, we'd only be down this much. And what I think you'll find moving forward is it's pretty tolerable. Just some things to think about moving forward as you figure out how you want to interact with Holly. Of course, Holly has to stick to her rule set every day, meaning timed hold is one reason she can get out of a position, a stop loss, profit target, etc. Of course, she's always going to tell us why she's getting out of the trade in the exit reason column here. So 24 trades today, and let's see here, let's just count them up real quick. Obviously most of these were long trades today, but we did have 4 shorts triggered today, and one of them was one of the better movers that we had. So let's just take a look at some of these plays that we could have interacted with. Now, there are two things that we like to showcase here. Going risk on a trade-by-trade basis, and then the other one is what we call a trade around, and we've got a couple of examples of both of those today. So first and foremost, let's take a look at, say, the trade in COUP today. And let me just get this 5-minute. Here, we're on a 5-minute. Okay. So once I double-click from the All Trades blotter, populates on my chart, and we can see right here was the entry for Holly. I'll just draw a line across here. Forgot to mark that one up. So Holly calls out right here, you know, long play. And of course, what are the expectations? Get this question a lot. So COUP came from float on. So we know coming into the session, the strategy flowed on according to the 40-day back test. Anything coming out of this play or this strategy today had a slightly over 60% chance of working today. So right off the bat, Holly's telling us 60% chance of doing what we think it's going to do, which is go up. Now, coincidentally, or in addition to that, we can see that float on today did have 3 trades and came in at 66.7%. So it actually outperformed itself by a little over 6% today. So very nice entry on Holly. This kind of fits both bills because typically risk on is us saying, okay, if we take this trade with Holly, we get a little vacillation here. Of course, everybody needs to keep in mind stop loss is there for one very important thing, and that is if it goes down to this level, clearly it's failed, and that's where we're going to take our loss. As we can see here, as soon as we got into the stock, immediately profitable, and then immediately back through the entry price. So a lot of the times what I'll get into the habit of doing, as soon as a Holly position goes red, I'll just go ahead and set a price alert on that same entry price again, because these plays are weighted for the day. They don't always go immediately. Sometimes they'll vacillate around a little bit like this one did and go back and forth through the entry price. So we can always have an opportunity to see if we want to add to this position, popping through that second time, or if we didn't take the trade and we notice that Holly is red in a position, that can also act as our first entry, going back through for the second time. So whichever way you choose to use that, it can be very enlightening because the statistical probability is good for the day, but as we all know, timing can be a little off sometimes, which also is good because sometimes, assuming we like what's happening with the stock, we can get better pricing than Holly does sometimes.
Hey, are you ready to talk about a couple specific trades? Because I can jump in here and segue with a decent question.
Absolutely. What do you got?
Okay. Well, common question, and I love to address it, and I have 2 examples. So it looks like this is mostly a day trading tool. Holly, the AI, is required to exit all of her trades very quickly or before the end of the day. Now, what happens is stocks will come up on this just like another alert scanner that we've had for 14 years, and you'll say, I'm so glad I got this scanner to show me this WLL. I would have never seen it. This did not come up in any one of my scans today. However, I will pat myself on the back. That's a horseshoe up strategy. That's one of the strategies that I've used for years, and we added to Holly, and Holly's taken to the next level. But it's essentially looking at gap ups that can't fill the gap and then start to move higher with continued momentum. Well, that's a decent looking intraday chart. Yeah, nice day trade. But what does it look like if we zoom out and look left? Look at that. Big pivot level broken out on good volume, gap, closed on highs. There's a swing trade. So, Mr. Roy, there's a classic example of how, these trades are not brought to your attention from CNBC or other instances, but occasionally you've got to put your trader's hat on and look at this and say, wow, this was a really nice day trade. It could turn into a swing trade if I'm that type of risk-tolerant person. Maybe I'll sell half here near the close, lock in half, and then see what happens. But my gosh, look at that daily chart. That's textbook pivot line, breakout, gap above, volume, close on highs. Other example is COUP, the very top one, COUP. This is a newer issue, but what happened was, once again, a really nice breakout of some sideways consolidated action on good, decent volume and closing on highs. Again, another trade that not would have been on our radars had Holly not brought it to our attention. So the big takeaway is here, these trades all start as intraday trades. That's what they're scanned on. But the bigger picture is up to us to take a look at and see how these things are working on the daily chart and if they fit our own risk parameters. You know, we all know what our eyes like and what our eyes don't like, but those were two examples today that I thought Holly did a great demonstration of showing continued alpha beyond just a day trade. But it is up to the trader to identify those. You know, it's a subjective game, and so not everything looks the same to everybody. But the value add is basically on the entry and is good for the whole day. Where you exit, you know, is really up to you. This is designed to be a gray box, not a black box. And so two great examples there I wanted to show you of how a Holly trade coming out can turn into a great swing trade that they're not talking about on CNBC.
Absolutely right, and you hit the nail on the head. They're not talking about it because all of this talk about, oh, well, that's swing trading. Oh, wait, no, that's day trading. I mean, the signal is the signal. Nobody wants to enter a position and then it immediately goes against them 2 points. That's not what we want as traders. We want to be in the money as quickly as possible and then assess the risk afterwards. So it's almost like the equivalent of dogma in the market. You know, oh, well, I sell a swing trading system. Oh, really? I sell a day trading system. Oh, really? Well, I tell you what, all I really care about is quality data, right? And so that's what we do here. You know, we give you entry points. Holly gives you entry points that are statistically weighted. Let me say that again. Holly gives you entry points that are statistically weighted. Now, how much do you hear people talking about how they're applying statistical probability to their trading programs? You don't. Why don't you? Well, because then they couldn't sell their RSI indicator or their swing trading program or things of that nature when we just try to distill it down into the bare essence here. You know, give me a good entry point that's backed by either statistical probability or, you know, a litany of other things like volume, whatever your favorite metrics might be, but that's the first part of the equation. You know, if you're going to make some pizza dough, you better have some flour on hand, you know, and you will need a little bit of water, but, you know, the bottom line is you got to get it started, and then what it turns out to be on the other side of the oven, you know, could be an intraday hold or a multiple day hold, you know, second part of the equation.
Take-home bag.
Mm-hmm. Could even be a little take-home
bag.
Never know.
Doggy bag.
But while we're on the topic of how COUP turned out to be a potential great multiple day hold as well, I want to point everybody's attention to the column here, because Holly took 16 cents on a profit save exit. Now, you know, notice we never came close to the stop, but we've built in technology to Holly so that she does not let a winner turn into a loser. So she gets a little skittish. You know, she only held this one for a short amount of time and then got out when things got a little bit wicky. But if we're in this position, and like Steve likes to say, we have our trader's hat on. We're in it. It's going our way. It's taking a little bitty pullbacks, but I mean, whoosh, whoosh, and more whoosh, you know? So going risk on is simply staying in a trade when Holly has already exited. So I hope that makes sense.
You know, one of the things I've noticed too, and I bet you'll agree with me, is the trades that start off in the risk-off column, 16, 15 cents, and then go on to make over a buck. The exit reasons are usually what? Profit save. It's such a over-conservative, skittish defense mechanism. It's a very it's set to be very, very defensive. So a lot of times I notice that the ones that continue to scream and move higher, Holly took her 16 cents out of the mouth of $1. But that's just another observation I'm trying to.
Well, I'm glad you said that, Steve, because I mean it also kind of circles back to a little meme that has been around the trading community forever, especially people that congregate in offices and whatnot. But it's like, okay, you've got Holly, say it's a two-man team, or one woman and one man, or two women, or whatever. But Holly's going, I'm really good at spotting statistically inclined entries. That is my strong suit. And then you're like, I'm really good at exiting trades, right? So once again, coming back to the human and the machine working together, that's exactly the way it is right now, right? Holly's really good at the entries. She's not so good at exits sometimes. Hey, I made 16 cents, I got nervous, or her algo kicked in. But using our chart rating skills, a lot of the times we can pluck a lot more than Holly does just by using some simple charting methods. And like, here is bond shorty spit out CRC short. And of course, 5-minute candles is what we're looking at here. So let me get it right on the money here. So if we just draw that line straight across, Holly's calling a short right here. Pretty much goes our way immediately. Holly plucks 15 cents yet again. 97 cents at the close is what that position would have been up. So just using a little bit of chart reading skills and wearing our trader's hats, we can manage the exits. Holly can manage our entries and give us quality setups. And then if we can get into the mode of managing our exits, we can increase or go risk on a lot of these trades.
Okay, a quick thought. I wanted to just add to it. Look at the top 6 there. There's really 2 of them. It's the time stop and the profit save that really seem to do continued alpha after Holly gets out. And then that's kind of an anomaly. Usually the reduced risks don't really return. Sometimes they do, but it takes a while to go all the way down before the very first stop hit on the exit reasons, the way you've got them sorted there because you've sorted them by risk on profit. So my point is the profit save and the time stops usually are the ones that show up on the trades that continue to work well throughout the rest of the day. Now, hitting a stop, that's a different story. That's a bit more serious. That's usually a good thing and move on. And then what's the other one? Oh, target hit. Everybody loves target hit. So profit saves and time stops don't always mean that it's the best reason to get out. It's up to you, but that's what the AI is going to do. But that's why we call it a gray box system. So I'm trying to highlight that when you see Holly getting out on a good-looking trade, but whoa, she just was in it for 5-10 minutes and just got out on a profit save. Okay, well that's just the AI doing her thing, trying to make sure she locks in a green trade, not going red. Those are the ones that seem to move a little better on good days. Is my point.
Absolutely true, Steve. Okay, so those are pretty much the highlights of Holly today and how to interact with some of these plays, whether it is a trade around, which is setting a price alert on something like Will here that went through the entry price and then comes back down again. But notice never even came close to our stop price. The reason Holly got out on Will was a reduced risk when she was down a little bit, right? So once again, what is Holly? A high-quality information stream, statistically weighted, right? She's just like any other window within trade ideas, but she's the one applying statistical probability and backtesting millions of trades a night to provide everybody with these data sets. So lots and lots of heavy lifting going on behind the scenes to bring you what you're seeing here, ladies and gentlemen. So that's really the big takeaway here is huge amounts of data being crunched for our benefits on a daily basis. Okay, so since the SPY closed above all-time highs today and we're in uncharted territory, kind of thought it might be kind of a good idea to kind of pull the rug up on the SPY and see exactly what's been happening. Who are the guys within the SPY, those components, that have been doing this? And if these things keep happening, could they be good trading events moving forward? The answer is yes. Could they be good stocks that are setting up good on the dailies moving forward? Answer once again is yes. So, in times like these, we have to kind of pivot and go, okay, I think I should be looking at these types of things. So what we're going to do is take a look at this strategy here, which is basically very simple. We're looking at stocks hitting a new daily high And by the way, these are only stocks that are in the S&P 500. This specific sample is going to be looking at 50 stocks in the S&P. And yes, by the end of the webinar, we're going to drop this configuration in the chat area along with a spreadsheet that contains the 50 stocks so that those of you who want to follow this one moving forward can do so. So looking at the filter, and of course, since we're only looking at 50 stocks, we could probably get rid of all these and get the same results, but just wanted to show you it's a very basic filter combination, and the alert is simply a new high. Now, if we look, we're only looking at one list, which contains stocks that I procured after running a couple of scans and going, okay, I think I should focus on these 50 moving forward. Now, that might change in a week, in a couple of days, but that's the beauty, is that you have an idea. We give you the ability to go find all that data and put it into a working model. Voila. What would have taken you, I don't know, maybe weeks to do in the past, now can be done in a matter of minutes, right? Simply by using our product to rearrange massive sets of data and backtest it. Sounds simple, but there's a lot of special coding work being done to make all of this happen. So what do we have here? Well, we've got this configuration that I just showed everybody, nice and simple. Let's take a look at the history. Because what I did is I designed this window to start paying attention to it 30 minutes after the open. So I just removed the check mark from real time so we can see the history. Make sure, we're looking at the right date. And then we just cruise down here to 7 o'clock Pacific Standard Time, which is 30 minutes after the open. So good thing about this window is it's not producing too many plays. And of course, we don't have to worry about these guys being liquid because they're all S&P components. So, we can see first out of the hopper here, 46.26, we get an alert on ConocoPhillips. Nothing big there, but as these symbols keep coming out, we're going to notice that they all tend to do the same thing. So Celgene, and I've taken the liberty of drawing some orange lines across the actual entry price. So Celgene, setting up nicely. And then for those of you who, might want to keep eyes on, this is not a trend change lubricant, but it is exhibiting this consolidation pattern, which makes you think that it might go higher. And then, of course, we'd have to look at all these other resistance levels here. But it's always good.
It's got that leaving the train station look, too, that we've been talking a little bit about.
It does. That is the same pattern that you were seeing and describing earlier, Steve. But, once again, whether you get a good intraday trade off of this or whether it just brings a stock to your attention that might be exhibiting these characteristics on the longer term, it's great either way. All right, so Celgene and then good old Monster.com, we would have gotten a signal here for a little bit more upward drag. And then, of course, this one doesn't look quite so tasty. So if we're trying to discern whether or not, okay, we got this pop, should we go ahead and cash in, or do we have more? Well, we're going to consult here. All right, another one, AN, AutoNation. We would have gotten a signal right here, do a little sideways dance, and then, sure enough, get more upward momentum. So if we keep going through these guys, you're going to see, hey, everybody knows Facebook. What a great entry on Facebook, shortly, about 5 minutes after it breaks the daily range, you get this nice little candle here. You can always use right here as your exit. And you see we get a nice push through, a nice follow through on Facebook. And of course, what would we do to get realistic expectations of how much this thing could go? Because nothing worse than getting out for a quarter and it goes $1.25. We've all been there. We've all done that. So these are simple methods that you can use to try to prevent that from happening and get the most alpha possible. I'm sorry, Steve, I stepped on you there. Did you have a comment for that one?
I just said zoom out, look left.
Mm-hmm.
Look at the daily charts.
Out, look left, ZOLL. So, not to bore everybody too much, but looking at what this thing was even spitting out in the last 1 minute. Not that you're going to jump in there and start trying to execute a trade and try to make a couple of pennies in the last 1 minute, but interestingly enough, Texas Instruments, look what it's doing on the daily. Popped out of that nice little consolidation area there, boom, off to the races, you know. So whether you're watching this for intraday or for daily setups, or you're just taking these trades for intraday trades and then looking to see if they're going to be good for multiple day holds, that's great. Because if we backtest this strategy, we've got pretty good expectations. So what I've done here is I've just set this backtest up to say, okay, let's sit out the first 30 minutes. We're going to stop taking trades about a little over an hour and 1 minute before the close, and a 30-minute hold time. Now, just like when you're interacting with a Holly trade, that's what the strategy was designed around, but if that 30 minutes comes up and it's still working, well, then you might want to think about staying in that trade a little bit longer. Now, I haven't approached this with any profit targets or stop losses because I just kind of wanted to see where everything sat in its own natural environment with no profit targets, no stop losses. Just show me what's my average winner coming out of this data set, what's my average loser. And we're doing a 40 trading day back test, as we can see here. So then we just did a good old simulate buy button.
And while we're waiting, somebody had a good question. How did you select the 50 stocks?
I will gladly skim over that topic in just one momento. Well, looks like it's going to be done pretty quick here, but initially I ran the scan with the entire 500, and then using our optimization tab, which we can kind of go over here as well when it completes, picked out, in other words, you can say show me stocks, or show me the top 10 performing stocks, show me the top 20, show me the top 50. So I just kind of went with the top 50, which is 10%, the top 10%, or 10% of 500. I mean, 10% of the overall. I just figured that'd be a good starting spot. But the beautiful thing about it is you can do it with 200, you can do it with half, you can do it with the top 20, right? And get that information and get that feedback very, very quickly. And of course, we all know that backtesting is no guarantee of future performance. But, nice statistical looking sets do give us expectations.
The other thing that you can do to optimize, aside from see which stocks are performing the best within a group, is the time of day. And that's probably one of the reasons Jamie's already come to the conclusion that the first 30 minutes of each day is not always optimum. So that's why he probably started at half an hour after the bell.
Right, and I see the questions coming in there, so let me just try to answer these real quick. The event is what we're focused on. This collection of filters and this alert, that's the event. So the scan is only identifying the stocks that meet the event. Now, just so you know, this event happens to be volume related because it's only showing us stocks in the S&P 500 that are hitting the high, which is the trigger, where in the last 1 minute period that closed, the stock had to have traded 3 times the amount of shares as it normally does in a 1 minute period for that specific stock. And that's the minimum value. So you see, when S&P 500 stocks are doing that, it typically means something. It's different than S&P stock popping a new high that's not doing any volume, that might just finish the day doing its normal volume, slightly above, slightly below. Once again, it kind of gets fuzzy here as to what is your definition of volume. Well, in my opinion, a stock that usually trades 1 million a day that's going to finish the day trading 3 million shares, that's volume. If a stock's trading 1 million a day and I'm seeing a relative volume of 1.2, that doesn't do anything for me. But then again, that's just what I like. Somebody else might like that. I'm just showing you the data on the stuff that that makes a lot of sense from a very pragmatic standpoint to me. Simpler is better, Occam's razor, all that stuff. So the back test is completed for the 40 previous trading days, 2 months on the calendar. What are we seeing here? We're seeing 543 trades come through over that 40-day period. And just blindly taking them and dumping them after 30 minutes, we're getting a pretty significant win ratio here, just shy of 67%. Not quite a 2-for-1 on the average winner versus average loser, but when we look at the daily over the past 40 days, that's something that you might want to keep your eyes on, ladies and gentlemen. So what did it do on Friday, for example? You know, on Friday, everybody was like, ooh, are we going to cruise into the weekend in party mode, you know, with CNBC wearing their funny little hats, and is that going to happen? Well, that did not happen on Friday. Matter of fact, I had a little red candle here on Friday. But as we all know, doesn't matter. On down days, there's still stocks that are going up. So, you know, if we just popped over to Friday of last week, oh, well, look, this one still spit out 8 trades and won 7 out of 8. And we look at these stocks, we can see all those stocks, the time, and based on 100 shares, how much did we win or lose? So, you know, just keeping with the theory that, you know, the S&P is not the entire market, but 500 most highly capitalized stocks out there. It's not the holy grail, but when we get into interesting times like this, all-time territory, then it does make a little bit of sense to get in there and kind of see, you know, okay, well, what's driving this beast? You know, what is the fuel powering it up? And, you know, it's not, it's the event that we're looking at, and then the stocks exhibiting the events are the ones that are going to be brought to our attention.
Hey, if you go to optimization and time, does it show that the first half an hour is kind of noisy? It's not even in there because you've got it. Okay, that's fine. It's already been filtered out.
Right, exactly.
Oh, you would have had to run it. Okay, so let's assume it is. I just want to take it one step further. Go ahead and close, you know, the back test unless you're done talking about it. I just want to show people that weren't aware that when you run back test strategies and you're like, oh, this strategy works great between such and such times, right? You can go ahead and run it if you want. But it's hard for us to remember what strategies, you know, worked better at what time of day. So we have a filter for that. And so the filter is called time of day, and I use it on a lot of the ones I like. But so basically, once you've optimized and determined what the sweet spot time of the day is, use that trade ideas filter called time of day, which is essentially minutes after the open, to say, in this particular case, we put a 30 in the minimum because we want nothing to come out for a minimum of 30 minutes after the open. So now he's showing us optimization. There's time of the day, first half hour, win percentage was sub 50, 49%. A lot of trades, a lot of junk, not a lot of good stuff in there. So, you know, once you've determined from back tests what the sweet spot is, use the time of day filter. It's so much easier than having to remember what strategies work best during what times of day.
Right, and it's real easy to install that. That way you don't have to worry about the sliders in the back tester. You can just leave them wide open, which is kind of good once you get into the scanning mode. It just helps you alleviate the settings. So all we would do is type in time of day to find that filter, and then we'll just go ahead and hard code it into the filter complement by saying, okay, 30 minutes after the open. And then we can leave that slider open at 6:30, but it won't start looking until 30 minutes in. What is the TI definition of volume? Well, Steve, I don't think we actually have a TI definition of volume.
We have many different ways to look at volume. Volume is the total amount of trades on any given stock at the end of the day. So we could take a 5-day moving average and say, I don't want to trade stocks that don't at least do 300,000 shares a day. So that's a volume filter. That's one way we can look at volume. We also can look at volume in the last 5 minutes. We know what an average 5-minute volume candle should be, so we can use those as filters to see stocks that are doing 200% of normal 5-minute volume. So that's a very difficult question to answer because there are really so many different ways Trade Ideas looks at volume.
Yes, indeed. So now if we go back and look, obviously we won't see anything in that first 30-minute period. And as we can see, 7 to 11:59 originally, the trades that were occurring in the last hour were unproductive. So I eliminated that area because why would we go there if the data tells us it's a non-productive area?
Mm-hmm. Exactly.
So, of course, if we come here, we can see, okay, we've got 50 symbols in this strategy now being backtested. But look, out of those 50, here are the top 10. These are them right here. And we can see what's interesting is on a 40-day backtest, if you look at the trades column right here, well, LUV was triggered 11 times in a 40-day period, 10 times, 13 times. So you see, what is this telling us? These aren't just one-off poppers. These are obviously stocks that have been trending and, are doing the high volume because let me kind of just requalify the volume here because everybody's got their different ideas of what volume is. And what time frames are the best and so forth and so on. Well, 1 minute being the smallest time frame that we look at Trade Ideas, what I've noticed, and by the way, I've only been watching this data for about 10 years, so I might be a little off. But typically what happens if stocks are hitting highs, meeting that 1 minute volume criteria, you're not just catching it on the 1 minute where it happened to do that. It's typically doing it all day, right? If a stock is being sold by institutions and just going down all day, it's probably going to have those metrics consistent with it throughout the whole day. If it walks like a duck, quacks like a duck, oh, it's it's a duck, right? Of course, we're looking at the upside version, but guess what? There were plenty of stocks being sold off today. Of course, this is a pharmaceutical. They can defy all kinds of logic. But look, ALXN was going down all day, right? Chances are, is if you went back and looked at these crucial breaks, like, for example, right here, breaking down out of this range, as it went down here, you're going to have extremely high volume levels. Now, depending on the chart pattern that you like, maybe this one's conducive. Maybe it's not pretty enough. It's too sloppy for you. But, everybody's got a little bit different of a preference. But, Einstein borrowed from Leonardo da Vinci, but Leo said it best. Simplicity is the ultimate sophistication. Whether you're talking about volume or charts or anything else for that matter, or your trading platform. So, typically, if the stock is doing these, whatever the animal is that you're hunting. In this case, this is the animal that I'm hunting. It's this assortment of filters with this trigger. Now, some of the animals that we hunt, some of the animals that Holly hunts, this filter set extends all the way down to here. There might be 50 filters in there. But once again, the premise is the same. Whenever these very special conditions light up, tell me about it. Now, whether one of those special conditions happens to be volume or not, maybe, maybe not. But for this one, if it's an S&P stock doing these crazy 1 minute volume levels as it's hitting a high, it's probably something you want to pay attention to. So I'm going to go ahead and drop this into the chat panel. And Steve, I think we can drop the spreadsheet in there as well.
Yeah, you should be able to drop in both.
All this moving forward can do so. So Steve, looking at the clock here, we're pushing the time envelope. Anything else you want to get out there?
A couple of stocks to watch, I think, are WAC. I like the way that one's looking on the daily trend change lubricant. It's got another high short float, possibility of moving. Let's take a look at the daily. You guys, if you zoom out, there you go. That orange line right there, just in the high fives. Look at that. Not a lot of shares in the float and a pretty good short float. So that's kind of my one to watch for the week. And TWLO was another one that pulled back today. This one has also a very high short float. I like the way it pulled back and filled the gap today. No real entry level on this one other than just keep this one on your radar because this one has another high short float. And as I showed you guys earlier on my price alerts, the stuff that's working are the short squeeze stuff. So still going to focus on that until it stops working.
Right, and I like that. We say it all the time. We're going to keep showing you guys the stuff that's working until it no longer works. So that is the motto. So I'm going to drop this window into the chat area. There's the configuration link for that one. Now if I can find my spreadsheet that I created for you guys with the symbols. All right, well, Steve, I tried to drag and drop it, and it is giving me the little Ghostbuster sign. So let's see here. All right, well, I guess I was wrong on that topic.
On the Excel spreadsheet?
Right, trying to drop it into the chat.
Yeah, let's see. That would be an actual file, wouldn't it? So it may have to go into the handouts window. How to do that? Tell you what, just probably have to give out your email.
Here's the deal. It's only 50 symbols. Right. Okay, here's the deal. Anybody that wants this list, just please email me, and I will forward it right over to you.
There you go. Because it's a file, just as simple.
Yeah. So it's just a simple text file. Pop it right over to you, those 50 stocks. But of course, you may want to use that configuration, and for those of you who have the access to ability, you might want to go through there and go on a little treasure hunt of your own because you never know what you're going to find until you set upon that task. I don't think we can cloud link a symbol list, David.
I don't know if we can. Could give it a cloud link. I don't know. We can try. I mean, you can go up to your tools and.
Well, here, I'm just going to drop the list right in the chat area here.
You can do that there. Yeah, you can do that. That's the way we did it once before, if I recall. And everybody get your copy and paste ready and a Word doc ready or a spreadsheet ready, and then you can just paste the ones that he was using.
Well, I appear to have broken the chat window somehow. It turned green. I don't know what that means, but in any case, anybody that wants the list, please email me or email info@trade-ideas.com.
I see him.
Okay, cool. Well, I'm glad you can see him because I just see a screen that. There we go. Okay.
They're taking a little bit to load, taking a while to load. But while Scott's talking, if the people that want to try and experiment with that and grab that as a symbol list, go ahead and do so at this time.
Perfect. So, Scott, if you're ready, we're ready for you.
Yeah, thank you. Yeah, so thanks everyone for attending, and as a way of thanking you, we have a code that's good this month to save you a nice little sum when you sign up for Trade Ideas Premium or Standard. So it saves 15% off the Premium version, and that's good for either the first month or year, or 10% off the first month or year of Standard. So use the code AITRADES, all caps. You can also download a little reminder PDF of this. If you go to your handouts panel on your GoToWebinar interface, click on the plus next to handouts and click on that link there. You get a PDF that contains this as well as useful contact information. So as a reminder, both versions, the standard and the premium, include a full hour of one-on-one training with the likes of Jamie or Steve or Andy. And that's a great way to get a head start on the program. So even if you're just getting the standard version for the month, that is a fantastic introduction, although the premium version is really where the software is headed. That includes Holly and our price alerts and all the other advanced features. Thanks, everyone, for attending. There'll be a recording of this up later tonight or tomorrow morning, and you'll get an email tomorrow reminding you where to find it. Also, if you're on the Trade of the Week newsletter list, you should have already received, or you will be receiving shortly, an invitation to tomorrow's Trade of the Week webinar. So we encourage everyone that's on that list to go ahead and attend that. It's going to be our last webinar of the week because of the holiday on Thursday. And Then after that, we will see you the week following Thanksgiving. Hopefully everyone has a safe one. Thanks, Jamie. Thanks, Steve. Thanks, Andy. Thanks, everyone. If you have any questions, email info@trade-ideas.com with your technical questions. Jamie's jhodge at, and Steve is steve at, Andy is andy at trade-ideas.com. You can follow Steve at Today Trader on Twitter or Jamie at QuantBot. Trade Ideas 1 is Dan Merkin, or we also have Trade Ideas and a couple other accounts. Trade Ideas Pro on Facebook is worth following if you're on the Facebook all the time, because we post some original content there now and then, and it's a good way to keep up to date with that. If you have a billing question or a subscription question during normal business hours, we have a phone number. You can go ahead and use that too. Thanks, everyone. Thanks, Steve, Andy.
All right. See you tomorrow.
Thanks, guys.
Later.
Good luck with the rest of the week.